Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to Monday. Brand new week. Let's get it. Today, I want to answer a quick question I had regarding how I position and have long-term accounts. So I'll get into that in just a minute. I want to talk a little bit about inflation because we've got key inflation data coming out this week and how that could potentially impact rate hikes going forward. I want to spend a little bit of time talking about this Bitcoin narrative shift that seems to be unfolding right before our very eyes. Then I want to show you a couple of charts that are in focus for me personally. And from there, we'll just get to see what the week can bring. So in the meantime, sit back, relax, hit that like button, and let's get into it. So starting off with this question I was covering the gold and silver charts in a couple of videos, and I said that it may well be time in the near future to start to add gold and silver mining stocks to the longer term accounts. And so the question was, as a trader, do I also have a buy and hold account? Do I have longer term accounts? So I'm going to briefly outline what I hold and why. So this is how I, as a full-time pro swing trader, have my portfolio set up. So I have a trading account, a traditional finance account. In here, I do the bulk of my, let's call it my 9 to 5 job. The bulk of my trading occurs in here. And this will be leverage trading for the things like indexes, individual stocks, gold, silver, the sort of things that you see me pull the charts up for all the time. That is what I do inside of my traditional finance account. I also have a crypto trading account if I want to put a leverage trade on. So for example, with Bitcoin, something like this position in here, or this next position that we're looking to add, then this could be done. It could be done within my traditional finance account, and it could also be done via a leverage exchange. But this is sort of my, what do you want to call it, my income accounts. This is what I do the bulk of my trading in between these two. When I say longer term accounts, I also have a SIP, which is a pension system in the UK where you get to pick your own stocks, shares, investments, whatever you want to have. So you get much more control over it versus a standard pension where in the UK, a pension fund manager will allocate the money for you and you have to trust them to get your return. But as I am actually a trader, then I can significantly outperform any pension fund. The main reason I have this account, to be completely honest with you, is before I went full-time as a trader all those years ago, I had a regular job and that came with a pension. And once I left that job, I mean, this was just play money. This was play money in a pension account, and I was getting, I think, between 6 and 8% a year return by doing absolutely nothing, just because the pension fund managers were investing that as a standard pension in the UK would come. But I took that pension and I moved it into a SIP, so I had control of it. And the reason I call this play money is I'm actually a believer that in the UK, most people that have pensions are probably going to have them stolen. Now, this is a conversation for another day. I look at this money as I try to trade it as best I possibly can. I put it in and out of stocks. I can use stop losses in it. And if I want to add exposure to certain things, then, for example, the miners, I will probably add some exposure in this SIP. But I always think of this money as if I get to actually have it when I get to the pensionable age, then I'll consider that a bonus. The pension systems in the UK are very, very fragile. Most of the money in the pension system isn't actually backed. It's very, very highly over leveraged. So if we were to go through some catastrophic great reset, then it's likely, in my opinion, the pension wealth is all going to be stolen. But since I already had a chunk of money in my pension account from all those years ago when I used to work for a pharmaceutical company, what was I supposed to do, right? Am I just give up, just let it get 6% a year? No. So I pulled it into a SIP, I trade it. Hopefully, you know, if I was to die early, then I guess it could be inherited by my family, or in the best case scenario, if eventually, you know, when I get to pensionable age, maybe I can withdraw it. Maybe I will actually get to see some of it. But I always look at this money, like if I was going to start from scratch, I wouldn't open a SIP. I would want money that I could access at any age, at any time. I always thought it was kind of a scam, right? You pay this money into a pension fund, it gets invested, but then they tell you you can't have it until we decide you're old enough because we're worried you might blow up all your money. Well, I'm competent at managing my own money, so give me my money, right? But anyway, it is what it is. So I have a longer term SIP. Like I said, it's just a pension account. I trade it. Hopefully one day I'll get to see it, but I always treat this as kind of like paper gold, you know, like it's not really yours because I can't hold it in my hand. Hopefully I get it. And like I said, if I died, then my family would get to inherit it, which is fine. But anyway, that's the SIP account. I have a longer term crypto account, which is largely just Bitcoin. I have Bitcoin stored on multi-sig cold wallets in different geographical locations. And I do that because that makes it quite difficult for the government or any entity to seize. If they can get in your house and they can take one of the crypto wallets or one of the recovery phrases or whatever, then they could probably take your crypto. But it's going to be a real pain in the arse for the government to get hold of your crypto if you have more than one wallet, and they don't know how many. Remember, they can't tell whether you just have 3 wallets and you only need 2 to get to the crypto, or maybe you've got 11 wallets and you need at least 7 of them to access. They have no idea. So especially if the wallets are in different geographical locations, it makes it really hard for the government to break into your house and steal your crypto versus if you don't use multi-sig. So I have longer term crypto accounts, and I mostly just take my profit out of all of the rest of the trades and slowly add to this over time. I don't really use banks for saving money. I use crypto, like I said, multi-sig wallets, and over time that's worked well for me. I also have a longer term account in the form of I keep physical gold and silver, again, in various locations, in various places. That is a long-term stack account that I just kind of add to over time. Typically, what I like to do is make money trading gold on leverage and then exit that money to physical gold and silver. So I also have a longer-term metals account, if you want to call it that, but it's just a stack, as most people have, I'm sure. I do not own any bonds. Again, it's a conversation for another day, but I never have. I probably never will, to be completely honest. And I don't own any property as an investment. I own a house, my own house, but I do not own any property as an investment. The main reason for that is I personally think I can get a better risk-free return by trading. So if I was going to buy a property and lease it to somebody, they can, legally in the UK, they can just not pay. They can move in and not pay rent. And you're stuck having to pay the rent for at least 6 months before you can actually get a court order to evict them. Not to mention, given the massive interest rate hikes that we've been seeing across the world, mortgage payments, if you were to get a buy-to-let mortgage, they are now largely unprofitable. A lot of people would say, yeah, well, at least the property appreciates in value. I'm not really a believer that property does appreciate in value. I think currency debases against it. It's not really very liquid. It's not a liquid asset. And so I can personally take the money I would put into a property to rent out and just put it in a trading account, and I can get far better risk management. I can choose my own allocations, and I can outperform a typical rate of return on a buy-to-let mortgage or a buy-to-let property. So that is how I do it. Like I said, it's kind of 3 sections. The bulk of it is, let's call it income. This is my trading. This is all the positions I show you and call out ahead of time. I have this play account because, I had some money in an account. Let's see if I get it. But like I said, I wouldn't open a pension account personally. I do not trust the UK pension system. I have my longer term account for crypto, which is like my hodl stack, if you want to call that. I have the same for precious metals. And like I said, no bonds and no property as an investment, although I do have a primary form of residence because you've got to have somewhere to live, right? So I hope that answers your question. Moving on. Look, the national debt for the US has now increased by over $1 trillion since the debt ceiling was suspended last month. So remember, in the first 2 weeks, we saw over $500 billion added. Then the following week, we saw another 200 billion odd added, and now just 4 weeks later we are over $1 trillion in new debt. And this is why I keep saying over and over again, I think all roads lead to more cowbell, all roads lead to more printing of money, and therefore I think we're going to see more inflationary spikes in the not too distant future. This week there's a few key events such as the CPI on Wednesday, the PPI, then we've got jobless claims Thursday, consumer sentiment Friday. We've got a bunch of bank earnings that are starting to begin. Likely they're going to be revealing a lot more losses from this whole bond fiasco. And we've got 8 Fed speakers talking this week. So volatility is likely set to return. If you've been watching the channel, you're already probably well aware of where I stand and how I view what's coming over the next couple of weeks for the stocks. I do want to point out something which I think is really important. This CPI inflation data that's coming out on Wednesday is likely the last time that we are going to see a significant decrease in CPI. The reason for that is we measure CPI year over year, and this time we're comparing to a year ago. We're comparing this current readout to where it was a year prior, and the inflation a year prior was quite high, right? But after this inflation comes out, after this data point comes out, the drop is going to be really, really difficult on a year over year basis to see a large drop at the next readout. So I think we can get down to a 3 handle. Trueflation has us at 2 point something. I think that's possibly a little bit ambitious, but I certainly think we could see a 3 handle for CPI. However, it's going to be really interesting to see what happens at the next CPI readout, because to see a significant drop again below 3, because it's calculated on a year over year basis, like I said, it's going to be quite difficult to see that. So it's probably the last inflation data point that we're going to see where CPI comes down significantly. So it's going to be an interesting week, that is for sure. Of course, as inflation comes down, the Fed has a decision to make. Is it going to continue and maintain a pause in rate hikes, or are we going back to hiking rates? Just remember where we are, with another hike on the table at the moment for July, and it is on the table. If I go down here, you can see 92.4% likelihood that we're going to see a 25 basis point hike. So with that additional hike on the table for July, we are really in uncharted territory. If I click into this, you can see the yellow here is the current rate hiking cycle. It's more aggressive, it's faster than any other rate hiking cycle that the world has ever seen. So this is absolutely insane. We really are in uncharted territories. And if we continue to hike, then this is just going to look even more ridiculous, right? So really are in unprecedented times at the moment, uncharted waters. And maybe, just maybe, we can see a pause and a reprice accordingly. For the most part, I don't think this is an issue, even if they do hike. And the reason I say that is this is already largely priced in. As you can see, this is pretty one-sided. So I think all this does is either confirm what the market has already priced in, or if we see a pause, then it will reprice this way, of course, and that will likely lead to more bullishness than bearishness, in my opinion. One day at a time, as ever. Moving on to Bitcoin, the narrative is shifting here. Suddenly, Bitcoin is being termed greener, helping third world countries, and it's not being used by bad guys anymore, and this is in the mainstream media. So I think what we're seeing here is a narrative shift for Bitcoin, and of course, if we really are going to have some big blow off top, if we really are going to have the launch of the ETFs and see Bitcoin's price appreciate, you better believe that likely the big boys are already in position. They've probably been in position since the lows. And now what they're going to do is start to ring the alarm bell. They start to sound the alarm all the way up to lure in as much retail exit liquidity as they possibly can. And I expect to see a cycle that represents possibly one of the last true opportunities to make significant money and to get into position for Bitcoin. So I'm excited to see what can happen. Remember, 92.5% of all the Bitcoin that there will ever be, of all 21 million Bitcoin, has officially been mined. We only have 7.5% of the Bitcoin left to mine between now and the year 2140. So there really is a true opportunity here in the first and best and only form of digital scarcity on the planet. As demand continues to increase over time, the supply will continue to dwindle, and therefore we should be mathematically guaranteed to increase purchasing power over time with Bitcoin. Zooming out and looking at a few charts, here are the facts. When Bitcoin's volatility gets low in a bear market, that's a bearish thing. It speaks to a squeeze in volatility and a consolidation before a continuation of the prevalent trend, which is of course bearish. But when volatility gets low in a bull market, it's the opposite, insanely bullish. The weekly Bollinger Bands prove this. Entering a low volatility zone brings big moves. Bitcoin, remember, is in a bull market. It's been in a bull market since the FTX capitulation lows at 15,600. You can see the setup today comparable to prior massive advances for the price of Bitcoin. And to continue on this theme, nothing about this bull market screams overbought just yet. At the current trajectory, Bitcoin will top later on this year between 90 and 130k. The green was your chance to load up. So you can see plenty of upside space ahead. Now we'll get an answer, won't we? The crowd is still divided. There's still a bunch of people that champion in this basing structure into the halving. There's still a smaller group of people championing the 10k plunge. And then there's a smaller group of people as well, such as myself, championing this idea that we're going to get a blow off top and a new high for Bitcoin this year, followed by a true secular bear market decline. Anything and everything is on the table as always, but we're right around that time now where if we don't start to move up rapidly and confirm that my primary expectation is correct, then it doesn't really matter, because what we will have learned is Bitcoin is going to continue to do Bitcoin things into the halving and then likely go after the halving. This, of course, would also confirm that the halvings do indeed drive bull markets. Now, I'm personally not a believer of that. I don't think the halving is what drives the bull market. But again, if this is what happens, I will have to accept that I was wrong about that. So I don't need to do too much in terms of charts. Bitcoin still kind of basing. Is it going to drop down now? It's due any day, isn't it? If this count is indeed correct and we don't have to adjust it, then we should see a plunge in the next couple of days that reverses and we could go long down at a swing. If not, patiently waiting to see if we can break above the top here and add more exposure. Here's gold. I'm keeping a close eye on gold. Let me zoom in a bit here because I want to show you a couple of things. So first of all, the downward sloping blue resistance line. We are currently breakout, possible retest before resumption, but we are clearly underneath this horizontal in red. So that's a tick against the bullish argument and towards pushing this short further. I can also grab a trend line here and connect these wicks. And what you can see is we have had a move into double resistance. So unless we can break out above here, and for me personally, the red horizontal is really what I'm focusing on. Unless we can get above this, I don't want to close this short just yet because there's still time for this thing to roll over. I don't mind being a little bit late to gold because gold typically moves quite slowly anyway. So I want to be open to seeing a rollover from gold, but get above here, and this will be my line in the sand, this red horizontal. Get above there, we will indeed have a change in market structure and be looking for higher numbers. Silver as well kind of speaks to indecision, doesn't it? It has had opportunity to break out, and it just hasn't done that yet. So it doesn't mean that it won't today or this week, and if it does, then we'll add the long, right? But for now, it still speaks to the possibility of seeing a 4 rejections at resistance followed by a rollover one last time. So I'm open to anything. That's what I'm paying attention to as it stands. And the last thing I want to point out is the S&P 500, right? All the while we're between the stop loss, which is indicated by the red dash line, which has been moved up from the initial position. All the while we're between this cycle low and this sort of blue line here. Then all of this I consider no man's land. So anything that happens in here, I consider irrelevant. But get above this blue line, get back above here, and I think we can breathe a sigh of relief for the bulls. Conversely, get below this cycle low, take out this stop loss, move down here, then I think we're going to have to entertain much more significant pullbacks into that next daily cycle low, which also will form the weekly cycle low. And from there, I think we got a good chance at reversing and attacking new all-time highs, as I've been saying over and over again. So one day at a time as ever. Everything inside of here for me is no man's land. So get above or below that, and I will start to be able to say, I think I know what's going on, but we could easily spend a couple of weeks in here before we actually end up making a decision. So as ever, one day at a time. Welcome to Monday. I hope you have a great week. And in the meantime, look after yourselves. Take care from me. All the best. Cheers. Bye.